You gotta be flipping my flapjacks, folks. We have some stocks just continuing to make insane moves here. Celsius Holdings, look at this one here today. Closed over $60 a share, now up 150% on this one, up $147,000. Congratulations, anyone out there who holds Celsius Holdings. This stock is unbelievable. Up almost another 7% here today, up $15,000. Wow. You're looking at ELF, continue to make another huge move, another 6% plus move here today. This stock was $93 when their earnings came out. People panic sold this one all the way down to 93. You know how long ago that was? Less than 2 weeks ago. Less than 2 weeks ago, people were willing to sell at 93. Now people are willing to buy at 123. And nothing fundamentally with the company has changed in this, since that day. Like, we had already known the earnings and everything, and yet people are willing to pay another 30% premium versus where they were panic selling out of. Unbelievable. And think about this a little bigger, right? You see a 30% move like that. That's what people usually hope to make in 2+ years. 2+ years in an index fund. And ELF has given you that in less than 2 weeks. Unbelievable. SoFi continues to show momentum. This stock closing well over $24, up another 2% here today. Now we're up 191% on SoFi shares, up $79,000. Meta, on the other hand, hey, Meta, this is not allowed, okay? Meta went down here today, down 2%. 3 core subjects I want to speak about in today's video. The first one is I want to talk about Celsius, SoFi, ELF. What's going on with these stocks? Where are these stocks headed next? Okay, these ones are just continue to show momentum. When is it going to end? Where are they headed next? We'll speak about that in this video. Meta, is the run over in regards to Meta? That stock has been on a great streak. Is the run over? We'll speak about that in this video and what's going on with Meta stock. And a third thing we'll talk about in this video is hedge season has started for me. I just placed my first hedge position, in a long time, basically, and we'll talk about why I went ahead and did that. I think that's an important subject to talk about. I'm away again. I'm not in Vegas again. I'm just in a quick trip to Arizona right now. We have a family member that is in the hospital, so wanted to go visit them, see how they were doing, all those sorts of things. So we just made a quick trip to Arizona. So it's not a long trip like the past ones where I was gone for 2+ weeks. And one thing only I need from you guys, and it's for you to smash that like button. That's all I need from you. If you can just hit that thumbs up button and make it glow, that's all I need from you. I appreciate every single person that does that. Hopefully more than 10% of people can at least do that for me in this video here today. I appreciate y'all. Additionally, subscribers, thanks to everybody subscribe to the channel. We're about to hit 880,000 subscribers on the channel, and who knows, maybe we'll hit 900K by Halloween. We'll have to see in regards to that, but I appreciate each and every one of you. Okay, listen, 6-month chart of Celsius. The stock has gone up 166% in 6 months. I mean, it feels like 6 months goes by in a snap of fingers. It's like, oh my gosh, right? And 166%, that's ridiculous. When you consider, right, it's done that in 6 months. If you're in an index fund, you would hope to make 167% over probably 10 or 15 years in an index fund. And Celsius has given you that return in 6 months. That's insane, right? So the question you have to ask yourself, okay, a stock like this just gave you 10 to 15 years worth of index fund gains in a 6-month span. What changed with the business? Like, there must have been something fundamentally really changed in a massive way for this company, right? Well, if I take you back to 6 months ago, what happened? 6 months ago with Celsius, there was a lot of growth concerns from Wall Street and from investors. They were scared about revenue growth of this company. There was also margin concerns and where the margins of Celsius were headed. Additionally, there were market share concerns. How much market share is Celsius going to be able to get of the energy drink category or not? Additionally, there was Pepsi deal concerns as well. From when they did the Pepsi deal, Pepsi ordered way too much inventory. They boosted the numbers way up, way too high in 2023. So it was all those questions about that, okay? And then additionally, there was energy drink category concerns as well, because we saw some negative data in regards to the energy drink category. So it was like you just had an onslaught of all these things going like negative against Celsius in regards to people viewing the stock, right? What have we had since then? What has cleared up in the past 6 months that also makes everybody want to go buy the stock and say, I wasn't willing to pay $20-something for it 6 months ago, but you know what? I'm willing to pay $60+ for it now 6 months later, right? Well, we no longer have category fear. Now people are confident again in the energy drink category in general. They're confident that the compounded annual growth rates of the energy drink category is going to be very strong. And that's a fundamental change in regards to that. So that fear, it's gone now at this point in time. Next fear was around revenue growth. There's no fear there anymore. Celsius just reported $739 million of revenue. That compares to $401 million of revenue in the same quarter last year, which, if my math serves me correctly, that's like 80% plus growth for Celsius here. So there's no longer fear about, can Celsius grow the top line? No. That's gone now at this point in time, okay? Additionally, if you talk about market share and where Celsius's market share is, there's no longer fear around that. You know why? Because in their latest quarter, they just went to a 17.3% share of the U.S. energy drink category, up 180 basis points versus a year ago, led by demand for zero sugar and functional beverages. And my guess is, where's this market share number going for Celsius now that they have the Alani brand as well? My opinion is the market share for Celsius is going to 20+% long term. That's my opinion. They will be a 20% plus market share in the United States when it comes to energy drink category. And remember, international, and basically almost every important international market you would look at for the energy drink category, they're like single digit percentage. Like they're like a baby international right now. And believe me, based upon my opinion on studying this energy drink category for a long time, I used to be an investor of Monster Energy a long time ago, and even recently as well. I don't have any shares in Monster right now, but I know this energy drink category very well from my days at Walgreens, my days at Quick Trip and management. I know this category very well. In my opinion, international, they will be going to double-digit share international as well. And that's where you're going to see the biggest revenue growth opportunity. 2026, 2027, 2028, 2029, 2030 will actually be international. It's the same thing that happened with Monster. Monster grew massive market share in the United States, and then it was all about growing huge in Europe. Then it was about growing outside of Europe, in Asia, in Latin America, everything like that, right? That's a game Celsius will be playing for the next 10 plus years, okay? Now, additionally, margin fears. There's no margin fears around Celsius anymore at this point in time either. Because you think about this last quarter, all the tariff drama, what's going to happen with aluminum pricing, blah, blah, blah. And Celsius still came through with extremely strong gross margin of 51.5% despite all the drama, right? And, this was the first full quarter really of Alani being in there. And so you usually have some hits to margin that are usually negative whenever you have a new brand, that comes into your space as well. And you have to, obviously distribute that product and do things differently. It's usually some one-off hits, things like that to your margins, and Celsius just motored right through, right? Now, additionally, Pepsi, they made that major investment into Celsius, several years now ago at this point in time. 2023, they went too crazy with the ordering and into the first part of 2024, and then there was a come down of that, and it was dramatic, and it hurt Celsius's growth numbers. It made Celsius look like it was no longer a growth company when it is in reality, right? They're no longer being held back by that. Celsius is, from my understanding, Pepsi's cleared all the inventory, so that's not even an issue anymore at this point in time. So the Pepsi problem this stock had second half of, really a lot of 2024 and into maybe the very beginning of this year, that's old news now at this point in time. That's no longer an issue for the company, right? Now, in regards to stock price and where the stock price of Celsius is headed from here, okay? Listen. If you think about where the stock was, we can call it back at the beginning of 2024. This was a stock that was getting close to $100. It was pushing, $96 or so, right? Think about the company now versus then. This is a way more exciting, better business model, in my opinion, with not only the Celsius brand, but the Alani brand as well. The market share they now have, the penetration now they have, the ability to grow Celsius internationally, and Alani in the US and internationally. Like, this is a way better, in my opinion, safer company now than it was back when that stock was hitting 90 plus. So in my opinion, that stock's headed to 100 plus either this year or next year, in my opinion. And, not every day is going to be up, not every week's going to be up, but the trajectory will be up and to the right, in my opinion, in regards to Celsius, because the numbers are just going to keep coming through, in my opinion, stronger. And do you know what's going to happen? I'll tell you exactly what's going to happen. Every single person that wants exposure to growth in the drink category is going to want a piece of Celsius, and they will buy the stock, and until Celsius comes down to, let's call it single-digit growth rates in regards to them, like, the stock will continue to find buyers. And the holders, like, what's our incentive to sell? This is something important you guys got to understand, okay? Listen, before we get into SoFi, ELF, Meta, hedging, all those sorts of things, listen. Where's my incentive to sell my Celsius shares in the public count? I think it's up to my fourth biggest position in the public count. I think I have, 4,000 shares of Celsius in there. Where's my incentive to sell Celsius right now? We had a company that's still so early days in the international expansion. They're still growing rapidly in the United States. They got the Alani brand, one of the fastest growing, if not the fastest growing brand out there of major brands in the energy drink category. The margins look great at 50% plus. The profitability should skyrocket in 26, 27. They got the Pepsi, hook up there, right? So Pepsi's very incentivized to do everything they can to make sure Celsius and Alani are successful over the next 5, 10, 15 years. Where's my incentive to sell Celsius? I just don't have one. And so that means you're going to have stubborn longs who aren't really interested in selling, and you're going to constantly have people flooding in to buy this stock, because it's, where else are you going to find these sorts of growth rates in the drink category, period? You're going to look at Coke, Pepsi, Keurig, Dr. Pepper. Those growth rates are like, those businesses had trouble even growing at all, right? Monster growth rates have obviously come down immensely over the past 10, 15 years. So you're not, like, Monster's not some major growth name nowadays, right? That's just kind of like a stable, good, growing company. Celsius is the one that you look at and you're like, that's the growth beast. And so that's going to continue to attract that money that wants to go into a growth name, right? Now, next up here, let's talk about SoFi. SoFi stock, very important one to talk about here, where SoFi stock is headed, why it's seeing momentum, all those sorts of things. Before we get into that, if you are somebody that wants access to all of my premium courses, that's including Becoming Master of Stock Market, Millionaire Playbook, Stock Options Mastery, How to Hedge, Dividend Investing Mastery, Financial Statements Mastery, My Valuation Mastery, pin comment down there, click on that. You can fill out a form. That will allow you to essentially apply to join my private stock group, which when you're part of my private stock group, you get access to all of my courses. Additionally, you get access to the private Discord chat with the 6, 7, and 8-figure members. Additionally, you get access to 1000xstocks.com now. And additionally, you get access to see the moves I'm making on my nearly $4 million Fidelity account each week, okay? And once you join us in there, we'll send you your Steel membership cards in the mail to your house. Yes, baby. The 1000X card and the private stock group membership card, okay? Alrighty, guys, that will be the pinned comment down there to take you up to a higher level than where you're at. SoFi Technologies. So this stock closed in 24 plus here today. Stock's up a shocking 240% in the past year. Like, this stock, you can't even call it red hot. It's burning hot. It's like a blue flame. That's what I would call it in regards to SoFi. It's like a blue flame stock. Insane, the momentum the stock is seeing, right? Now, here's the thing you got to understand, okay? When you look at, let's say, the public count, I have 5,000 shares of SoFi, sitting on 191% gain, sitting on $79,000 of gains, okay? Listen, basically all those gains have come in the past year. The past year. So this is still early in regards to the move for SoFi. Like, when you're talking about great growth stocks, they don't make a 1-year move. They usually make 3 to 5 year moves at a particular time. And then they take a breather, or they go through some sort of short-term crash, something like that. This stock's only really been red hot like this, well, not red hot, blue hot like this for a year. And so, once again, usually great growth companies put together several years of a major stock price move. For instance, if you look at Palantir, which I'm up 2,272% on, right? That's a several year move. Palantir bottomed Q4 2022 and started to head up from there, right? And Palantir bottomed, it was like, Palantir, I think it was $5 or $6 at the bottom, right? Then it showed momentum and made a big run to 20. Then it made a big run up to the kind of the $50 level, right? From there, it made a big run up to the $80 to $100 level. And from there, it made a big run all the way up to 180 plus, where it topped at recently, right? That's a several year move. That's what great growth companies do. So if you think SoFi is in the early innings of a major growth cycle, we still probably got another year, if not 2 years, of SoFi stock price momentum before we'll have a major slowdown and then potentially a crash in the stock. Then that's just natural what happens, right? Like, maybe SoFi runs to $60, right? And then has a crash down to 40. It's not crazy to imagine. Like, this happens all the time with great growth stocks, right? Now, in regards to SoFi here, right, the thing you got to understand, betting on SoFi is like trying to bet on the next JP Morgan, right? Where if you think about how dominant JP Morgan is in the marketplace, how big that company is. People are fully convinced that SoFi has an opportunity to be the next JP Morgan for the next, 10, 20 years. And when I look at SoFi, I'm like, it has a lot of the ingredients, and it has the sort of growth rates that if you run these numbers out, you're like, oh my gosh, like if we talk about it 10 years from now, like SoFi could be a banking giant, right? Now they got to get through the next recession or two that we will have those do happen. And when you run any sort of banking related company, right, which this SoFi is more than a bank, it's fintech, right? But when you run any company in the financial space, the biggest thing when it comes to a recession, get through the other side with a good balance sheet, and you'll be able to capitalize on the next economic cycle in a major way, right? And so a bet on somebody like a SoFi is like betting on Amazon 20 years ago, where you could have bet on Walmart, right? Walmart is like JP Morgan, like it's a dominant company, going to continue to be relevant for decades to go in the future, right? Going to continue to be a giant. But there's this other company that, is pretty darn exciting and is going to put up extraordinary growth rates that are going to completely dominate the other company in regards to growth rates, right? And so that's my opinion on betting on SoFi versus betting on JP Morgan. JP Morgan's like betting on Walmart 20 years ago. There's nothing wrong with that. Great company, great business model, going to continue to be relevant for decades to go in the future. But SoFi's an Amazon-like opportunity, right? And that brings me to the next point around SoFi. You got to understand there's some stock. You guys ever seen the movie Limitless with Bradley Cooper and Robert De Niro? You ever seen that movie before, right? And he has this limitless pill, and it like allows his brain to like think so much differently than everybody else, and essentially like he's like a higher, almost becomes like a higher being, like a higher life form, because his brain just is operating at such an advanced level, right? There's some stocks that are like that limitless pill, okay, where they're I would call it like it's probably 0.1% of stocks, or maybe even 0.01% of stocks, have this ability essentially to, they're not judged by the traditional things you judge companies by. Traditionally, you're going to judge companies by P ratios and forward P ratios and price to sales ratios. And like, that's what it is for 99.9% of stocks. And that's why I teach you all that stuff that matters, right? Running projections. But there's like 0.01% of stocks or 0.1% of stocks that basically are limitless. These stocks do not run by the traditional fundamentals. They run by the future. Stocks like Tesla come to mind. Like Tesla's entire public life, since that company went public back in, 2010, 2011, the company's always been a limitless stock. It doesn't run off traditional P ratios or forward P ratios or price to sales ratios. None of that. For that stock, it just doesn't matter. People believe, it's a game-changing company that's going to be, nowadays they're talking about robots and self-driving cars and all these different things, right? If you look at Palantir, Palantir has been at a ridiculous valuation for quite some time. And even when that stock was $6, people said it should be $3. Palantir does not run by the traditional, usual things you would run a stock by, right? Amazon, up until really the past few years, was also one of those limitless stocks. Amazon never ran on traditional fundamentals of like a P ratio or forward P ratio, right? And so there's a certain amount of stocks that they're limitless. And I look at SoFi as one of those very rare stocks that it will never run on traditional P ratios, or I shouldn't say never. It won't run anytime soon on traditional P ratios or anything like that. Eventually, all companies will, in the end, be judged by P ratios and forward P ratios and price to sales ratios. That will happen in the end game for all stocks, including Tesla, including Palantir, including SoFi, including everybody, okay? But you can go through 10, 20 years where it just is irrelevant. People are buying that stock because you are the future. And that's the way SoFi is. SoFi will not anytime soon run on traditional metrics like a JP Morgan would be judged, or Bank of America or Wells Fargo. People will continue to buy up SoFi stock for a long time to go in the future. As long as they make it out of this to the other side in regards to recessions, keep putting up great growth rates, people will buy that stock continuously, regardless of valuation, regardless of anything, else, right? And here's the other part you're not considering, okay? Listen, people that are holders of the stock will continue to hold the stock regardless of the short-term trailing 12-month P ratio and the forward P ratio. They'll continue to hold the stock and not be interested in selling it because they're like, why would I sell the future? Why would I sell the next JP Morgan when they're not the next JP Morgan yet? So that's just something to kind of keep in mind there. And it's very few, man. It's very few stocks I can think of off the top of my head that are true limitless stocks. It's like 0.01% of stocks in the market, but they run different, and that's SoFi. Next one up here, let's talk some ELF. Then we'll get into Meta. We'll talk about hedging season starting, why I'm doing that, things like that, okay? So here's the deal with ELF, okay? Listen, the sales increased for the company 9% last quarter, right? Kind of a slow, sleepy quarter for ELF. ELF's usually a strong, double-digit growing company. They had a very tough comp to comp against. They had all the tariff drama to factor in. They had some retailers that probably under-ordered, in my opinion, right? Based upon kind of looking at some of that trending data. So here's the deal, though. The road deal's closed now, right? So this upcoming quarter will be the first quarter that the numbers start to hit for ELF. Oh my gosh. Oh my gosh. ELF's about to show skyrocketing growth rates, right? Once again, just like Celsius has. So the thing you got to understand that's going on with ELF right now is people are front running that because they know ELF's growth rates are about to skyrocket again. Plus, you're going to likely get the core ELF brand start to post some very impressive numbers, probably Q4, starting in Q4 of this year, and then especially going into 2026, because the comps will get a lot easier. They've been dealing with brutal comps for the past, I would say, several quarters, if not the past year, and the comps are going to get a lot easier because they're not going to be showing these ridiculous growth rates, right? So you have easier comps, ELF brand getting back to nice growth, and the road deal going through, the growth rates are going to likely skyrocket for ELF, okay? So when it comes to ELF, here's a stock that topped a little over $200 back at the beginning of 2024, okay? Here's the deal. The stock's likely coming for 200 plus again in 2026. And this is a rare company where when you look at the makeup industry, you look at the beauty industry, right? You look at the cosmetics industry, where can you buy a stock that is going to be having, extremely strong double-digit growth like ELF's going to be reporting as soon as next quarter, right? And then, just insane growth rates after that for the next many quarters. Where are you going to get another opportunity like that? It doesn't exist. It doesn't exist. Like, you could look at all the public companies you could possibly invest in the cosmetics, makeup industry. Where are you getting those sorts of growth rates? It doesn't exist like you're going to be getting from ELF. You're going to be seeing ELF report 30, 40, 50% growth rates. And you're not getting that anywhere else. There's just not that sort of opportunity out there. The only other exciting opportunity, in my opinion, for the next few years is Estee Lauder EL. But EL is more of a story around getting back to revenue growth. It's a turnaround play, and getting back to their margins are going to likely increase dramatically over the next year or two. Profit's going to increase dramatically over the next year or two. But it's not like even Estee Lauder is going to be reporting 30 and 40% revenue growth numbers like ELF will be reporting, right? So you just don't have those sorts of exciting opportunities. You got one opportunity. It's ELF. So what happens when you have that? What happens with the market from the stock price perspective side, right? Here's what happens. You start to have scarcity, right? Because it's a scarce thing. Like, where else are you going to get that? It's very scarce. You can't get another ELF. It's not like they get another ELF where it's like, oh, there's this other cosmetics company right here I can invest into that's growing, 40% revenues, and there's this one over here. There's not like, there's this one option. So it's scarce. And then you have the shareholders say, why do I need to sell ELF? Well, why? When this company has all the markings of being the next cosmetics giant, one of the biggest cosmetics companies in the world, we know now ELF, what they're doing essentially is they keep growing their brand massively, right? They keep expanding their revenues, their market share, all those sorts of things, and then they can produce great cash flows from that. Then what can they do? They can either take out debt or use existing profits to go fund acquisitions of other hot brands. And they grow even more powerful. And when they grow even more powerful, they can go buy more brands and more brands and more brands and grow even more powerful and even more money, right? And eventually you become a conglomerate, which is what ELF's likely on the trajectory of becoming a conglomerate company, of owning a ton of different brands, right? And then someday, you become so big that even when you make acquisitions, it doesn't really help your revenue that much. That will help in ELF eventually. But that's probably, my guess is that's not until the late 2030s. ELF could keep playing this game for the next 10 years of growing revenues bigger, profits bigger, cash flows bigger, buying other brands, bringing them in-house, expanding distribution. That increases revenues, profits, which allows them to... Eventually, ELF will get so big that, they'll make an acquisition and it won't even be very material to the business model. But that's not anytime soon. Like I said, that's probably late 2030s we can talk about that game, right? And by that time, like Elf, who knows how big the company is? It's probably, you know, it could be a $50 billion company by that particular time, if not bigger, right? So Elf's likely on this way to 200 plus, probably 2026. But it's possible it could hit it this year, but I don't know. We'll see. We'll see. Okay. Next up here is I'm running over in regards to Meta, and then we'll talk about hedging season starting. Okay. So Meta, here's a deal. You know, everybody's freaking out over this today. Oh, Zuckerberg's reorganizing the AI team again. They think that means like Meta's doomed. Like it's not good that they're doing that, right? And I could understand people looking at it that way, but listen. Okay. I wouldn't necessarily view it as bad. Like Zuckerberg understands how to build products very successfully and services very successfully. So if he sees something not quite being as good as it could be, he's going to continue to reshuffle. Like he's doing this all the time in the company. Like Meta's always in the news because they laid off a certain amount of workers, or they're reshuffling this or reshuffling that. This is what Zuckerberg does. If he sees something not as good as it could be, he makes a switch. And that's the magic. And that's how you build a multi-trillion-dollar company in a matter of, like, Meta's not even an old company. Like, think about this. Meta was created, what, in a dorm room? How many years ago? 20? A little over 20 years ago? And it's what, almost around a $2 trillion market cap? Like, come on, man. And so, you know, I was talking with a friend recently about, like, Elon Musk, right? And I was showing him, like, how insane, like, his XAI company is now. In some of that, like, Grok and whatnot, how smart it's getting and intelligent. I'm like, this is incredible, right? And we're talking about how some of these other companies aren't able to do that, and Elon Musk can just like poop something like this out, right? And put a team together and like they build it. And that's the special thing you got with builders. Guys like this, they understand like they're working on like a whole different like brain wavelength. Like it's ridiculous. Like they're just the way they think and can conceptualize like how to create a team to go build this thing and like do it now with a small team. And big companies can't conceive this because the issue is big companies, a lot of times are not run by founders anymore at that particular time. They're run by executives. An executive thinks totally different than a founder, right? And especially these founders at the end of the day, they end up owning multiple businesses and creating all these great things. Zuckerberg and Musk are very different. Musk will create different companies that operate separately from each other. Meta and what Zuckerberg is doing, he's just creating one company and basically having everything under that. So I'm going to do VR and AR under all this company. I'm going to do messaging under this company, social media under this company, everything, right? So I appreciate that from Zuckerberg, and I like that everything's under one house because I get opportunities, in all these different avenues, right? And so they think differently, and they're able to create, and they're able to flip on a dime. And if something's not working, these guys are out, and new guys are in, and here's how we're shuffling this, right? And so, I don't know, man. I just don't think people should overthink when Zuckerberg or one of these guys is making a move like this, right? No, I started my hedging today. I made it was a little less than a $40,000 hedge in the public count. First off, you might think that's a huge amount of money. It's really not when the public count's valued at nearly $4 million. It was a little less than a $40,000 hedge. It's not a crazy percentage rate. And I have a lot of gains to play with. As calculated by Fidelity Investments, the one-year cumulative pre-tax return for the public count, 67%. As calculated by Fidelity Investments versus S&P 500 at 17%, right? So I have a lot of gain to protect myself with, right? And I think September might be a better time to hedge, but I wanted to get ahead just in case the Fed meeting goes awry. Just in case, I wanted to have a little hedge out there. But the better time to hedge might end up being September. If the Fed meeting goes well, the market likes it, we could continue to have a blow-off top all the way into kind of early to mid-September, essentially. So I might be a little premature here, but I'd rather just get a little hedge out there, right? But I have a lot of gains to protect here in regards to this. And so I started my hedging here. I'll build, so right now I'm just under a 1% hedge for the portfolio, meaning a little less than 1% of my total capital in the public account is in this hedge, right? I would like to take that, especially if the market has some sort of blow off top situation, throughout September. I would love to take this hedge position up to 2 or 3% weighting of the portfolio, right? I have so many great long stocks that a 2 to 3% weighting is nothing. You have to worry about that 2 to 3% if you're under a very low percentage gains. Like if you have trouble getting returns in the market and you get like 5% a year, 10% a year, you can't afford to hedge 2 to 3% of your portfolio. But when you're getting like 60% returns and like these insane amounts, you got the wiggle room to hedge, right? And I've been very successful with hedging. If you look at all my hedges I had in the public account earlier this year, all ended up super profitable. And I cashed those. I cashed them all too early. I could have made more money if I held them for longer, but I got an opportunity to make great money. And so with this new hedge I did, right? And everybody in the public account, everybody in my private stock group can see what hedge that is and what stock it is I'm betting against essentially and the strike price and everything like that, right? But the thing you got to understand is if the hedge doesn't go well and, doesn't work out, that's fine. Like, it's okay. And if it does work out, I'm going to probably, my guess is 2x to 4x my money in the next few months. It's a great risk reward profile. I'm not risking the farm, and the return on the other side, if I'm right on this, is huge. And I get to protect my portfolio. And if I'm wrong on this, it's not just about, I'm not going to lose that much, but additionally, good chance my long positions will beast. And let's say I risk 40,000, or let's say I risk 80,000. The money I'll make on the long side, if the market continues to go beast and that stock continues to go up as well, I'll probably end up making, $500,000 in long gains. So, okay, I lost 80,000 on my hedge, but I made $500,000 in long gains. I'll take that every time. $420,000 of extra profits, I'll gladly take that. And so, I think that's kind of important. But this hedging game, this isn't for everybody. This is higher level stuff. This is, usually you have to worry about stuff like this when you have multi-million dollars in the market. If you've got a $5,000 portfolio, does it make sense to try to hedge? No, that's silly. If you got a $50,000 portfolio, is it worth even trying to hedge? No. Your best bet is income over expenses, continue to build your long positions. When you've got portfolios of many, many millions of dollars, it can make sense to hedge. And if the proper timing and whatnot, it can be very, very handsome. Like I said, I'm probably a little early here, and that's okay. But if I'm not, it's going to be very profitable very fast. And I like to take, the thing is with these, I don't hold them forever. If I get a chance to make a huge profit on this, I'm gone in regards to my hedge, right? But we got to be honest, the NASDAQ's made an insane move since that Q4 bottom. The NASDAQ's up almost 110%, right? So at some point in time, we'll have a major break. And even on this run we've had since April, it's up nearly in a straight line. Eventually that will break and we'll head to the downside and the public count will get hit. And that's where hedges can come into play, right? My timing might not be perfect, but we'll find out shortly. And we'll find out over the next few months, right? And it's all good. All right, guys, appreciate you joining me. As always, thanks so much for being here. Once again, if you're looking to apply to join my private stock group, private wealth group, you can access 1000xstocks.com. See the moves I'm making in my public account, including the hedge I made here today, the buys I make every single week, the sells, all that good stuff, plus exclusive weekly videos from me. That will be the pinned comment down there. I even recorded my from my private stock group today, a video that goes all into the move, why I did it, how I'm looking at this. Those videos can be very valuable to kind of learn my thinking and my thought process around something like this from somebody like myself that's been doing this game for now, 17 years? Those videos can come in handy, and it's covering a lot of minute details that sometimes might not be the most exciting for YouTube, but they're very exciting, when you're, in a group like that. All right, guys, appreciate you. Much love as always, and have a great day.